Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Tesla stock, ticker symbol TSLA, Tesla being the electric car company, currently priced at $820 per share. Past year, up 328%. It's been surging since mid-March, and past 5 years, up 231%. Market cap is $151 billion. P ratio does not exist, which means they're not profitable. And dividend yield is 0, which means they're reinvesting all profits back into growth. Scrolling down a bit, taking a look at the analyst rating, it's fairly mixed. 24% give it a buy, 47% give it a hold, and 29% give it a sell. Now, in terms of earnings, actual earnings per share beat expected earnings per share for Q1 2020, which is very impressive. Now, taking a look at the financials, in terms of key stats, as I mentioned, trailing PE does not exist, so that's the trailing 12 months. Forward PE is 69.93, which means they're profitable. Taking a look at the 52-week change, up 332%, and 52-week high, $960 per share versus the low of $176 per share. So it's very volatile stock. Now, in terms of insiders, 20% own this company. Institutions own 57% of the company. Scrolling down a bit, no dividend yields. As I mentioned, it's not profitable at the moment, so profit margin is 0.55%, and operating margin in the trailing 12 months is 3.23%. Now, in terms of return on assets, it's at 1.59%, and return on equity is negative 0.47%. Now, for revenue growth year over year, that's 31.8%, so that's pretty impressive to see that kind of growth. Net income is negative 136 million, so they're in the negative. Now, in terms of balance sheet, you can see total cash $8 billion, total debt 15, debt to equity ratio is 142. So for every dollar equity they have $142 in debt. So very high debt to equity ratio. So operating cash flow, they have 2.6 billion, and levered free cash flow is at 1.55 billion. Taking a look at the earnings report, Q1 2020 updates. So you can see some of the highlights. Cash, 1.8 billion increase on cash and cash equivalents in Q1 to 8.1 billion, which is good to see that they have more cash flow so that they can sustain themselves during these times. Now, profitability, operating income, 283 gap in terms of income, 4.7 million operating margin, 16 million gap net income, and then the gross margin at the Giga Shanghai factory approaching level of US-made Model 3. Model Y gross margin positive in Q1. For operations, Model Y deliveries began significantly ahead of schedule, which is great to hear because Tesla, they sometimes beat their goals of delivery in terms of profitability, as well as the actual models of the cars, which is great to see. They increased the range for the Model S so it can drive further with no increase in battery capacity. And they reached production of 1,000 solar roofs in a single week. So they had Q1 2020 was pretty positive. First time in history, they achieved positive GAAP net income. Despite the global operational challenges, they're able to achieve the best first quarter for both production and deliveries, which is really good to hear. They've definitely been impacted by inefficiencies related to the temporary suspension of production and deliveries in many locations, but they've been working through those challenges. Scrolling down a bit, taking a look at the numbers. Now let's look at the automotive revenues, gross profit, and gross margin. So that's 38%, 64%, 75%. These are all year-over-year numbers, which is really impressive, and 538 basis points, which is very impressive. Now total revenues, total gross profit, and GAAP gross margin, year-over-year, 32%, 118%, and 815 basis points, which is also very impressive. Next is operating expenses, lost income from operations on operating margin, down 13%, so it's not as expensive as year over year. And then also lost income, 154% and 1,622 basis points. Now adjusted EBITDA, so earnings before income tax. So that's up 514% and 1,248 basis points. And the other numbers are negligible. Taking a look at the financial summary. So revenue in Q1, we reached our highest ever revenue for a seasonally slower first quarter as total revenue grew 32% year over year. So it's very impressive to see those numbers despite these times. And if it was not for the shutdown of some of their factories, I'm sure their delivery numbers would be even better. Now in terms of profitability, which is what everyone has been waiting for more consistent profitable quarters, our gross margin of 25.5% as well as total gross margin of 20.6% both reached their highest levels in 18 months, which is great to see. Now quarter-end cash and cash equivalents increased quarter over quarter to 8.1 billion, driven mainly by our recent 2.3 billion capital raise and offset by negative quarterly free cash flow of 895 million. So more profitable, more revenue, and more cash flow. These are very good numbers to see, and I hope to see these numbers in future quarters too. Now in terms of the valuation of Tesla, I know it's very expensive, but given that there's such a high growth companies with a lot of potential upside, I think it's a bit justified, and it's one of those long-term positions to hold for the long term. So you buy it, forget it, don't look back at it. And I think with Elon in leading the company, I think there's a lot of opportunities for innovation and improvements in the electric car space. So thank you, Elon, for doing a great job. That's all for this video. What are your thoughts on Tesla stock? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. See you in the next video.